Hello traders and welcome to the market opening preview on a Tuesday, July 21st, 2015. Coming to you with white blue sunny skies and white sandy beaches, live from Pattaya, Thailand. Traders, great to be with you. I do this during the Asia session, so if you're watching this close to London, your charts might look a little bit different. Traders, remember this is brought to you through FXCL Excellence in Trading. Please come visit the site at fxclearing.com. Today's got some charts to go over, some numbers to go over. Not much as far as the economic calendar. We'll get to that in just a second. Let me introduce myself to you. My name is William Gilday. I'm your moderator for the market opening preview series every single day before the London Open. Traders, I started trading in 2006 and 2008. I retired from a wonderful 27-year career in a public safety department out of the great state of Florida. 9 days later, I came to Thailand for a 3-month holiday to celebrate my wonderful career. And, well, it's 2015, and I'm still here, and I'm still trading Forex every single day. I trade all 3 trading sessions. I'm listening to fundamentals. I'm looking at technicals and charts. And I'm looking for opportunities with probabilities on my side to be successful in my trades. And my hope is that these videos will help you be able to do the same. And no, I do not win every trade. No way do I win every trade, trust me. But I cut my losers short, and I try to let my winners go as far as I can. But a lot of times my trading style is that everything's in place already. My trade manager takes care of it, so I don't even go back and look at it. I either won it or I lost it. So I can't stand watching trades. I like to put them on and move on. All right, that's enough about me. Let's get over to the risk disclaimer. Forex trading has a large potential rewards, but also a large potential risk. You must be aware of the risks to be willing to accept them in order to invest in the Forex markets. Traders, most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. Here's our news and commentary for today. Well, data on the economic calendar today is done. We had monetary policy minutes come out, and believe it or not, they weren't very positive. Actually, the Aussie moved about 47 pips on that data. I was unable to trade that as I was in the live trading room monitoring that. However, I'm sure it's going to pull back. It's a news candle. It's going to pull back. So we'll see what happens. I hope it doesn't pull back because I really wanted to go up to my pullback range on my fib so I can take that back to the short side. You only want to short the Aussie, right? So that's so that's the only data that's out today. Tomorrow in Asia, we have CPI, so be around for that. Pretty busy day tomorrow for data on a Wednesday, but today for Tuesday, it's very quiet. Okay, let's take a look at the indices. So let's see what's going on. The US 30 closed up 0.06%, and the S&P 500 closed up 0.08%, and the NASDAQ closed up 0.17%. So, if we go over to the Eurozone, the DAX closed up 0.53%. The FTSE 100 closed up 0.20%. The CAC 40 out of Paris closed up 0.35%. And the Euro Stoxx 50 out of Frankfurt closed up 0.44%. Let's take a wander over to Asia, where I'm currently at, and these markets are currently trading, so these are live. The Nikkei 225 out of Tokyo is currently up 0.39%. The S&P ASX 200 out of Australia is up 0.04%. The Shanghai is in the negative 1.02%, and the Hang Seng is positive 0.26%, with the Kospi out of Seoul is positive at 0.21%. That gives you what's going on as far as the indices go. So not much there. Commentary, quite surprised that some of our trade plans worked yesterday. I mean, I think 4 out of 6 of our trade plans that we did yesterday actually came into tuition. The hard one was the pound. Depending on where you put your stop, if you gave it a really tight leash, you probably got stopped out. If you didn't, it did finally come back all the way back down and almost to the pit. Took our take profit area. So really, really happy with our trade plans yesterday. Really worked out kind of well. You know, it's easy to sit here and do a trade plan and an analysis and a trade plan and say this is what we want to happen, and it's going to happen. But the market does what the market does, and we just try to put probabilities on our side, so it's more in our favor. And my goal is always to be 76 to 78% correct. I know I'm going to lose trades. That's just going to happen. But, I want to be in the 70 to 75% range of being correct. And that's what's important to me. And that's hard to do, by the way. I'm not there right at the moment, but we're getting there. All right, let's take a look at some 30-minute charts. These are 30-minute charts. That means each candle on the chart is 30 minutes in duration. As usual, let's start off with the euro dollar. What a, pardon my French, junk chart. This has been like hardly any price action. This is like 20 pips for the last 2 days. Pretty poor price action. Even on Friday was pretty poor. Really has not done really much. So if you notice, I've got our entry at 0.895 all the way back up to that daily R2. Now you probably say, well, why did I go to the yellow line, which is a resistance line, which would have been fine, and there's probably plenty of pips to get in there. But I'm like going for the hill because I like that daily 200 EMA sitting there, and I'd like to see that happen. If by chance it comes up to that yellow resistance line, which is right at the 23.6 Fibonacci level, I'll be more than happy to sell it. The other issue is right underneath it, you got your daily R1, so it's going to be a lot of work. You run into a lot of Forex junk, where if you take it from where I want to take it at the daily R2 at 0.895, if you look left to the chart, it's a wide open space. So, you can get break even plus 10 or 15, and then if you get down to that mess and get in trouble, you can get the heck out of there. So I'm looking for the big pullback. Unfortunately, we have very little data today, so don't know if that's going to happen. This chart might look the same tomorrow. All right, let's go over the pound dollar. Pound dollar, you can see that big wick on that candle there. Yeah, that might have stopped you out. That might have got you. Just depends on where you got in at. So that candle probably started off red, and the next candle. So depending on where you got in at, but the end result is this trade worked yesterday, and like I said, it depends on where your stop was. But the entry was kind of tricky. But if you took the entry that we had on the chart, you probably needed like a 30 pip stop, and you probably would have been safe and could have taken the trade and stayed there. I didn't even look at the pound yesterday. I thought the chart was so ugly. I still think the chart's very ugly. So I'm just looking for a pullback to this 50% fib at 55.80. Take it down to 55.44, and we'll give ourselves a 44 pip trade. I don't expect much out of the pound today. The Aussie had data today, and you can see that blue candle moving to the upside. It had its policy meeting minutes from last month come out, and apparently the markets didn't like it. And I think the main reason was that they really are not looking to change anything. So, like interest rates or stimulus, or they're not looking to change anything, and I don't think the market really wanted to hear that. You can see that I have my entry at 79.97. Why? Well, I got a resistance line there, and I got a 200 exponential moving average. So my chances of getting a bounce to the downside there are pretty good. So I'm hoping this continues up for the next 5 hours, 4.5 hours, and for the London Open, and then we can just take this to the downside, which would be wonderful. And we'll take profit either at the daily pivot point if we earn enough pips, or to the support line at 0.7346, which you can see that's marked on the chart. Let's take a look at the Euro Aussie. The Euro Aussie, I have no idea where this red candle came from. This red candle started before the data came out. So not quite sure what's going on with that. But I'm bearish in this. This pair is bearish. So I need a pullback. And my pullback's pretty aggressive. I want to come back up to the 618 with a 200 exponential moving averages and all that stuff. But If you look left of the chart of the daily pivot point, that's that magenta line, by the way, folks, on the chart. And that is at 38.2 Fibonacci level. If I get a bearish candlestick formation right at that spot, I'd probably take it short and just take my 20 pips and get the heck out of there. But I'd rather see it pull all the way back up to the 618 and make this a 60 pip trade. But this can be tricky. This can be really tricky. I mean, there's nothing to move the markets today. There's no data at all. There's nothing. Unless Greece comes out and says something crazy, which is, you know, they're good at doing that. And so we'll see what happens from there. Take a look at the euro yen. Euro yen worked out pretty nice yesterday. Give us that nice down move. Happened in New York and gave us our take profits. So that was pretty nice. Today's trade, we want to come up to the 618 again, and it's aggressive, but we want this to come back up, and we want this to pull back. This is only 18 pips down to our 134.34 area from where we're at right now. I'm not trading a 20 pip trade, right? Because you're not going to get it exactly at that spot. So now you're looking at a 16 pip trade minus spread, and you know, you're looking at like a 12 pip trade. Well, I'm not trading a 12 pip trade, so this really needs to pull back. It's got to come up at least to the 50%. If not, I really want it to come to that 134.84. Bring us down to the one. Even if it can bring us down to the 134.40 area, that would be fine. But we need to pull back. We cannot enter this trade at this level. This is a horrible level to enter. You just might end up getting smacked around. The other thing is you just might end up sideways for the day. Euro yen's good for that, so just keep an eye on that. Last trade of the day is the New Zealand dollar. If you take a look at the daily chart, you know it's as bearish as heck. Unfortunately, or fortunately, you can see I put the entry level at 66.03, which you know I would not enter there. I would enter at 65.90 or something like that. And we're basically at the sweet spot to take this to the downside. And I think we can get below 65.41. I think we can get down all the way down to the daily S1. So this is going to be interesting to watch. I'll start watching this about 2 hours before the daily, before London Open, to see if we can get that entry. I would expect that we're coming into the inactive zone of Asia. So I'm expecting that this will start to slow down now and go sideways. So you've got like an hour, and they're going to be in Asia lunch. So I would expect that this should go sideways, and hopefully we'll get a nice entry there right at the London Open just after. And that wraps up our 6 currency pairs, my friends. Traders, on behalf of myself, William Gilday, and our great friends at FXCL Excellence in Trading, I'd like to thank you for joining me today. Hope you learned something. Hope you got something out of it. Always remember to trade smart and not hard. Traders, have a great trading day, and we will catch you tomorrow before the London Open. Remember, tomorrow in Asia session, we have high impact data. Take care, traders. Have a good one. Bye-bye now.